Hello and welcome to Pro Trader Strategies market commentary for Thursday, August the 9th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, it's up to you to do your own homework and implement these strategies in your portfolio in your own way. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. Not really a whole lot to be seen there. So let's come over here to the United States. And we got PPI month over month came in at unchanged, was expected to increase by 0.2%. You know, that's producer price index. And then we got sorry about that. We got core PPI, which came in at 0.1%, was expected to be 0.2%. So a little bit lower than expected there. They want to see those prices rise because that's supposedly a sign of inflation. And we would think that we would start seeing some of the tariffs show up in that as well. All right, unemployment claims came in at 213,000, expected to be 220,000. That shows that people have found jobs and aren't necessarily looking. That's what it's supposed to say anyway. And then wholesale inventories came in at 0.1%, expected to be unchanged. An increase there usually is a sign of building inventory, can't get rid of it. That doesn't necessarily mean anything. We could be seeing them build inventory on expectations of future sales. So that one's a little bit wanky. And then natural gas storages came in at 46 billion cubic feet, expected to be 49 billion cubic feet. So in line with expectations there. Finally, we have a bond auction later on today. So to find that out, you probably have to watch CNBC and watch Rick Santelli screaming and yelling. All right, let's look at the overall markets. We've got crude oil coming off. Yesterday, we started to see that slide like really pick up at the end of the day. We did come down to the 38 Fibonacci level, bounced off of that. Today, we tested that again. So that is a very good support level. We've talked about that before. It came down and tested it one other time. So we got a double bottom here. If it can hold, that is going to be bullish for crude oil, you guys. If it doesn't, it's going to want to easily come down and test the point of control, which isn't very far away from there. But bulls are really looking to try and take advantage of that area right there. Now let's talk about gold futures. Gold futures are moving slightly higher by about $1 right now. Again, with Bitcoin and everything else, it's been really dollar driven for the most part. We're seeing strength in the dollar, relatively anyway. That would cause the gold futures to come off a little bit there. All right, and then on to Bitcoin. Yesterday, nice sell-off. It's really comfortable right here at around the $6,500 mark. It's going to take something major to really get this going. I'm really wondering about all of these cryptocurrencies, whether they were kind of a flash in the pan. I thought they would stick around, but there's just so many of them, and everybody seems to be ICOing lately, so that's also adding a lot of supply to the overall market. All right, bonds, nothing to see here, guys, right? Bond auction might actually drive this a little bit, but for the most part, we are in line with where we should be on that. And then nothing to see really in VIX. We don't have a big mover today across the board in equities. Dow Jones unchanged. Yeah, it's down a little bit on the day. It can't get through its own 38 Fibonacci extension, but we've seen that with the other markets. Like NASDAQ got above the 61 extension. That is going to act as support there. Whereas with the Dow, we're getting resistance. So we got some levers and pulleys going here with support and resistances. Dow was kind of leading for a little while. Now NASDAQ starting to catch up is what it's looking like. The tech sector is starting to catch up. E-mini S&P slightly higher on the day. This is a definite bull trend here, wanting to extend up to the 61 Fibonacci extension, which would create tweezer tops there. That needs to be broken in order to really get another push to the upside. And then on to the 30-minute chart of the E-mini S&Ps. As you can see here, just a pretty quiet day, almost could be considered an inside day, slightly outside of it right now, coming back down, could bring that line back into an inside day, which is what it really feels like at this point. I haven't added anything to my overall portfolio, kind of still looking for some earnings trades. I don't see anything really coming out, and I didn't do any earnings trades yesterday because the only thing that came out was like Yelp and a couple other little ones that I didn't really want to get involved in, so I stayed away from that, thinking maybe I'd get one today, but I don't see anything that I really want to trade as of right now. So just an update on the overall portfolio. Facebook, still sticking with this. Would love to see it break this 50 Fibonacci and go right down to the point of control in the next 8 days to get my options out of the money and, show that the probabilities are the probabilities. And I had a high probability trade on that should not be in the money at this point, but it is. I'm looking at it as the probabilities of being tested right now, and we're going to come off. It just doesn't look super strong right now. I would love to see a break below the 50 Fibonacci today, definitely. Google is another one that I have on. I have on the September 1,100 puts in there that I put on right after the earnings. As you can see, we got this bit of a spike. We got the volatility crush on the earnings, which is what we expect in this. Then, because the market was coming off so dramatically, we got volatility to spike back up above or right close to 50 IV%. That's when I went in there and sold those puts. That's the 111 puts I'm talking about there. So I still have quite a bit of time in there. It's already reached 50% of max profit. I'm squeezing this one out a little bit because we're moving into this bullish trend here. I've got a lot of days to go. So I'm on a itchy trigger finger here, ready to pull the ripcord if anything starts turning around at all. I was looking at it yesterday. It started looking a little bit toppy with a couple of those dojis that you can see right there. But today it's moving higher. Any break below here, I'm going to be looking to cover that though almost immediately. And then Tesla is something that I've been talking about. We got a big drop today after Elon said that he had the funding to get to $420 a share buyout to go private, things of that nature. He was doing a lot of chatting on Twitter, which really caused this massive rally. He said that stuff yesterday, even added fuel to the fire, rallied it up to very close to historical highs. Today, it almost is as if people are wondering if it was more of a bluff to get his stock to pump higher. As a matter of fact, when he said something about it being 420, I thought, hey, maybe he's smoking 420. Who knows? But we have seen a bit of a correction today in Tesla. I think it's way overdone to the upside, to be quite honest. They haven't fixed anything at all. So Tesla is coming off just a little bit today. Keeping an eye on my Tesla as well. Remember, I have 2-year puts on in there, so that are paid for. That's about it, other than later on this afternoon, we're going to be doing a webinar on laddered puts. This is seriously a great strategy. It's one of the strategies I used to use all the time building a portfolio. And when I want to add a stock, if I get hell-bent on adding a stock to my portfolio, this is how I go about that. There's no better way to do it. Put an order in with your broker at a certain level. Just is idle money and just not very savvy. All right, we can create income around those type of trades, and I'm going to show you how to do that in today's webinar. So if you can't take that, take it easy.